Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, November and December have always been considered as two of the biggest, most profitable months in the economic calendar, and this year should be no exception. With global inflation surging at the fastest pace in 3 decades, central banks around the world they have begun to signal a willingness to end their quantitative easing programs much sooner than expected. Signs of inflation are growing more obvious day by day, from soaring shipping costs to rising energy bills, food and general commodity prices to shortages of products and labor. Consumers around the world, they're now paying more for goods and services than they did a year ago, and that trend shows no signs of fading anytime soon. Figures released on Friday shows the US Federal Reserve's preferred inflation gauge, the Personal Consumption Expenditure Price Index in September, that rose at its fastest pace since 1991. After having more than doubled the size of its balance sheet to $8.5 trillion since the start of the pandemic, it could now be time for the Federal Reserve to start slowing down its monthly asset purchases. Expectations are running high that the Fed will announce plans to begin tapering its massive quantitative easing program this week, when officials conclude their monetary policy meeting on the 3rd of November. Whilst policymakers have hinted at plans to begin reducing stimulus as early as November, they always have the potential to surprise the markets by pushing back their timeline, especially in light of recent weaker than expected economic data. The Bank of England also meets this week. A succession of recent speeches from Central Bank Governor Andrew Bailey has led traders to believe the Bank of England will announce rate hikes on Thursday as the UK economy battles inflationary pressures that have proved more persistent than expected. Many traders are even convinced that the Bank of England will go even further by announcing an end to their quantitative easing program before the close of this year. Elsewhere this week, all eyes will be on OPEC and its allies as they meet on Thursday to decide whether or not to raise oil output. The major oil producers are under pressure from President Joe Biden, along with China and India, pleading for a larger increase in oil supply to help lower prices. However, Saudi Arabia remains adamant that the global economy is not out of the woods yet regarding the COVID-19 pandemic and that the oil markets remain vulnerable. That may be true with Russia entering lockdown this week and other European countries witnessing a sharp rise in new daily cases. OPEC was comfortable leaving output unchanged at 400,000 barrels per day at their October meeting, and that sent oil prices surging above $85 a barrel for the first time in 7 years. Lastly, another major market moving event the traders will be watching closely this week, that's the October US jobs report. Due for release on Friday, traders will be paying huge attention to Friday's data, especially as the previous 2 non-farm payroll reports have massively missed expectations. There are plenty of reasons why commodities are on the move, but the key drivers are rapidly surging global inflation, tightening supply, logistical bottlenecks and booming demand across many highly essential commodities as a result of the COVID-19 pandemic. As you know, volatility creates opportunity. Banks, hedge funds, they are making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they have already made in excess of 6 and 7 figures so far this year, and we still have another 2 months left to go. So if you have been kicking yourself for missing out on some of the biggest trading opportunities so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, as discussed with you last week, there was a massive opportunity to capitalize here on natural gas. So natural gas at the beginning of last week, this gapped up. That actually put our 2 natural gas trades up over 2,000 points of profit, which we were able to lock in. So of course, for every 1 lot contract that you'll be trading, that's over $20,000 of profit. And for every 10 lot contract that you'll be trading, that's over $200,000 of profit. So what we've done here in the last week is, as you've seen that gap higher at the beginning of the week and further surge into the middle of the week, we've continued to bank into strength, scaling out of that position. Now, if we do get a further sell-off, especially if we come back down towards key levels such as the recent swing lows, we would then look at fresh opportunities to buy in. In fact, that's a setup that I would keep on your radar as we go into next week, particularly if natural gas was to come all the way back down towards the 4.9 or 4.8 zone. That's a level that I would be very interested in looking for further bids to come in, especially if we were to see a gap lower over a Sunday through to Monday open again, like we did a couple of weeks back, which provided some great opportunities to buy in much lower. Natural gas does tend to gap quite a lot on the Sunday open. So it is something just to keep an eye out for as well. Typically, natural gas tends to perform very well over the month of November. So it is a market that we are looking to add if we come down to levels which will be attractive to buy back in again here. Now, many of you have also, of course, observed last week our gold and silver asset of the day videos. So we got it bang on with regard to the sell-off to expect on gold and silver on Friday after the European Central Bank announcement. Gold prices, they dropped down 1% on Friday. Silver prices also dropped down over 1% and retraced slightly into the close. So again, over 2021, so far every single European Central Bank announcement this year, gold and silver have tanked the Friday afterwards. Now, it's not to say that will continue going into next week because you have an FOMC statement on Wednesday and non-farm payrolls on Friday. So over the course of this week, I would expect price action to be range bound and choppy, but then again, the stats get quite strong for more selling pressure throughout the rest of November. So for example, over the last 7 years for silver, typically throughout the month of November, once you get non-farm payroll data out of the way, silver has sold off anywhere between 2.5% to 10% throughout the rest of November until the end of the month. We've also seen that on gold going all the way back to 2013. Once you get the non-farm payroll data out of the way next week, throughout the rest of November, gold has been under pressure 7 years in a row. If you know that, that can of course help you massively to get an edge throughout the rest of the month here. And you can see already where the dollar setup is in place. We've seen a breakout back above the 94 handle here, up 0.8% to the upside on Friday. At the peak of the move, it was up over 1%. For the week, it's up 0.5%. You can see very clear bullish continuation pattern to the upside. Obviously, if the dollar continues to gain strength throughout the month of November, that will put pressure on a lot of commodities, which can set up for some fantastic opportunities as you move towards the end of November and into December as well. Other markets that I would keep on the radar here going to next week would certainly be palladium as well and copper too. So you can see palladium over the last couple of days has been basing. In fact, we've had 4 tests back down towards the 1950 zone. Support coming in again into the close on Friday. Throughout the month of October, palladium rose 5.4% and platinum rose 6.2%. As you know, on palladium, we banked over 4,500 points at the beginning of the month when we saw a huge surge to the upside, following on from the usual end of quarter profit taking at the end of September and then right to the beginning of October, once China came back from their 1 week public holidays, their Golden Week holidays, where we established positions, we had a massive impulse move to the upside over 3 days, banking over 4,500 points there on palladium. But now we've pulled back down to levels which are more attractive to start re-adding into this position. So what we want to observe going into next week is whether we start to pick up momentum from the beginning of a new month as you move into November and see what opportunities we get for a potential impulse move to the upside throughout next week, and obviously keep an eye on this market throughout November as well. Typically, energy prices, palladium and copper, they do tend to perform well over the month of November. Copper also has dropped all the way down to the 4.3 zone. This is a level that we were shorting previously from 4.715. You can see now it's broken down over 3% in the last week. With copper here, we've got a long from lower prices. We also shorted from higher prices. I am looking actually to build further positions on this market over the month of November. Ideally, I would like to see copper come all the way back down to previous zones that we tested back in September, the recent swing lows there. We may not get as low as that. If we do, I do perceive that as a great opportunity. With crude oil, it's had the usual sell-off at the end of October, which is very typical alongside the stock markets as well, where you get that rebalancing of portfolios at the end of the month, contract expiry. But as we go into November, typically crude oil from the middle of November onwards performs very well. Natural gas over the month of November also typically performs extremely well too. So I definitely have those markets on the radar as well as we head into next week. As you know, commodities, they don't move up in a straight line, they zigzag. That presents us as traders with back-to-back trading opportunities. One of the biggest obstacles that holds many retail traders back from achieving their desired success, it's not having access to data and market intelligence to make confident decisions with accuracy in these highly lucrative markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you end up wasting lots of money and effort and have no results to show for all of your hard work. If you want to thrive, not just survive in these highly macro-driven markets, you need to adapt and utilize a professional, research-driven approach to the market. Trading like every other misguided retail trader using outdated technical analysis or gimmicky indicators, that will not work. We still have another 2 months left to go of this year. Time is the most valuable commodity that you have. Make sure that you don't waste it. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions. You need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. This is where you're using data, statistics, market intelligence. Alongside that, learning and understanding the daily, the weekly, the monthly, the quarterly cycle for each commodity. Learn and understand the intermarket correlations, the ratios in the market, capital flows. Alongside that, learn and understand the news items which will have the biggest impact for each commodity, creating those fast impulse moves that you can capitalize on extremely quickly. And of course, learn the intermarket correlations, the ratios in the market, key areas of liquidity, and also access to how the hedge funds, money managers, and banks and institutions are trading and positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a client, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.